What's up, everyone? It's Scotty with Money Vesting. Markets, another red day here, and we're down on the week as well, with the Nasdaq here dropping 1.7% on the day, the S&P 500 down about 1.4%, and the Dow Jones dropping over 345 points, or just over 1% on the day. We're pretty much closing in with a red week, and to make matters worse, well, good for us, the bond market, the 10-year yield dropping even lower, and it was down almost 5%. 10-year yield was dropping down to as low as 3.7%. And I actually did a video 4 days ago for all the members privately on our Patreon talking about a trade idea on TLT and TMF. In fact, I took a trade idea myself, and TMF pushing up over 10% here on the day. So this right here, TMF absolutely on the run, pushing up over 10%, trading as much as $8.83, and a very, very strong day as the yields kind of roll over. So this right here is our TMF trade. It did push higher a little bit faster than what I anticipated. I was hoping to kind of build up a bigger position in this ETF, but hey, inversion happens when yield curves drop. When yield actually does start to pull back, we do see a upwards momentum in prices as investors kind of flock away from equities over to bonds, and we are seeing a little bit of a flight to quality happen on an intraday basis, and as a result, TMF doing really well, pushing up over $8.84 as the yields had a pretty brutal day, selling off down to 3.7% in one single day, dropping over 5.27%. On the week, they're down over 6.4% and taking down the Nasdaq with it, which was down 4.7% this past week. S&P going down a little bit over 4.5%, and the Dow Jones dropping just over 1,400 points on this week. So quite an interesting day. Once again, if you want to access all the buy and sell alerts, trade ideas, trade alerts, private videos, and get access to swing trading ideas, I did close my Tesla covered calls finally for a 94% profit. And now our focus is on TLT and TMF, and this is where we are going to be paying attention to. So hope you guys enjoyed this video, find it helpful, and again, make sure that you drop a like, subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining us, and there is a 16% annual discount, and you'll get access to all the trade ideas and the alerts as well. So the employment numbers came out, kind of a mixed report. So non-farm payrolls month over month increased by 311,000 jobs. That's how much we added month over month in February, and unemployment rate ticked higher from 3.4 to 3.6%. And I kind of cleared up the confusion in my previous videos. How is it possible that we add jobs month over month and also see the unemployment rate tick up to 3.6%? And I broke that down in my separate video, so make sure that you do check that out. But the bottom line is, my expectation or my approximation is that we added 311,000 jobs. That's total jobs added, and we now have a total new employed population of 160.5 million people, with the new entrants in the labor force at just about 500,000. So that's the estimate that I believe that we had new entrants in the labor force, considering how many tech employees have been laid off. And as a result, we've got a new total unemployed population of 6 million people. If you kind of update that number, you'll notice that not only the ratio, the JOLTS ratio, in other words, vacancies to unemployed persons, has come down to 1.8, but we've also got the unemployment rate pushing up to 3.6%. That's the new unemployment rate, considering that we are seeing a bigger increase in the labor force participation, and participation rate went up 62.5% as opposed to the jobs added. That's one of the reasons why we are seeing an uptick in unemployment rate, even though we added jobs in the month of February. Private payrolls increased by 265,000. We did decrease manufacturing payrolls, and then we had the participation rate, as I said, go up a little bit from 62.4% up to as much as 62.5%. And average hourly earnings, 0.2% increase year over year, 4.6%, and 34.5 hours average work week. So kind of a mixed report, and because of that, the markets once again shifted over to 25 basis points, considering a softer labor market, considering an uptick in unemployment, and the Federal Reserve seeing that as a potential recession signal and pulling back on their rate hikes, which I doubt is going to happen. A lot of it kind of rides on the inflation report for next week, March 14, when that comes out. I think the market's going to be pretty much certain at that point how much rate hike we're going to see on March 22nd. But right now, 60% for 25 and about 39-40% for 50. And this is all over the place. This is quite a mess. If you take a look at the Fed funds futures, right now the market's pricing in a 60% probability for 25 basis points, and then the market's pricing in a 53% probability for a 50 basis hike, and then kind of staying up there, and then a 38% probability for a full another 50 basis points. So now the market is pricing in 125 basis points worth of hikes left in this year, and for us to get up to as high as 6% as a terminal rate. Just this number, which a few weeks ago was down to 10%, is now has a probability of 38.3%, which is the majority of expectation. And it's kind of like all over the mess. And then in December, the market's pricing in 1, 2, 3, 4, like a full 1 percentage point cut from the Fed down to 34.6%, then back up to 34%, then back down, and then back down, and then back higher. I mean, it's like all over the place right now in the Fed funds futures. Like, this is how much contradictory data and, of course, indecision there is in the market. Just take a look at these probabilities, and this is crazy. This is a complete chaos in the market and expectations for the federal funds rate. In my opinion, just focus on the value, focus on where the value is, and kind of obviously interest rates play a big role in our investment decision and kind of understanding where, we need to find opportunities and how we need to kind of focus on risk aversion. But that being said, you definitely want to be not kind of too dependent on these Fed funds futures rate hikes. It's just a good gauge on what the market's pricing in, what the market's expecting, but it's a complete chaos right now given how much indecision there is in the markets at the moment. Now, stocks obviously stumbled Friday. Tech-focused lender Silicon Valley Bank shut down following losses in its bond portfolio, prompting the biggest bank failure since the global financial crisis and sending shockwaves through the banking sector. I will be doing a separate video on this as well. I actually did a video yesterday talking about SVB Bank and, what's really the problem and how the Federal Reserve is kind of like in a very similar situation as Silicon Valley Bank. But I will be doing a separate video going over what other banks are kind of holding on to some of these losses as well, from a mark-to-market standpoint, and then from a hold-to-maturity standpoint. We'll be breaking that down in two separate portfolios, and we'll be talking about how the other banks are affected, which ones are the actual banks that could be affected with something very similar to what Silicon Valley went through just a couple days ago, and then also what could be the consequences on the economy and on the entire banking sector as well. Now, going over to, you had one major U.S. bank collapse, the biggest bank failure since 2008. Inevitably, that's going to spook the market. And several bank stocks were repeatedly halted on Friday, including First Republic, PacWest, and crypto-focused Signature Bank. First Republic dropped 14.8%, PacWest 38%. Some bellwether bank stocks suffer smaller losses, even as SVB's fallout wreaked havoc on regional names. Goldman Sachs and Bank of America fell 4.2% and 0.9% respectively. JP Morgan did hold on to a gain. And this is a game book play where traders and short-term investors don't want to be long over the weekend, and we are pretty much seeing a lot of exodus in the banking sector. So once again, a lot of selling pressure here across the board. Nvidia down 2%, AMD selling off, Microsoft, Apple also lower. Tesla held up slightly better, but I did close my covered calls when it was down close to 2% intraday, so I was able to lock in some good profits there. Amazon here down 1.6%, so we are seeing a lot of momentum on the downside for, of course, a lot of names: energy, industrial, real estate, materials, utilities, technology, communication services, of course, financials. Everything has been pulling back. This is the entire market, so we're seeing a lot of selling pressure here to begin with. So Dow Jones, we had 19 stocks sell off versus 11 that were pushing higher. S&P 500 over 454 stocks declining on the day, with only 39 advancing. And we got 15 stocks here pushing higher in the NASDAQ, and 86 were declining. And the NASDAQ, in general, we had over 2883 stocks declining and only 531 advancing here on the day. This right here, the state of the market, it is pretty red across the board on the 1 day, 1 week, and 1 month. All 11 sectors are red over the last several weeks here and several months pretty much. I mean, what we have seen is a lot of pullback and a lot of sentiment grow to the negative side. And we are right now sitting on a little bit of an extreme fear at the moment for the market. And over the last 1 day, volatility pushing higher on a relative basis. And then we also had, canola prices, S&P, and of course, natural gas and cotton pushing down. And Bitcoin, once again, trading at around 20,000, with Ethereum just a little bit under 1,500 at the moment. So Dow closes more than 300 points lower, posts worst week since June as Silicon Valley Bank collapses sparks a sell-off. We already went over the employment report. Let's talk a little bit about the VIX. It got up to as much as 28.97, so we were at one point pretty high, and we spiked a little bit close to over 55, 56%. Not a surprise, right? So we were expecting a little bit of a pullback and a selling pressure here in the markets in general. and the employment report just coming in with those mixed reports. And earlier this week, we had the testimony from the Federal Reserve Chairman Jerome Powell, and he also was, somewhat hawkish, considering that we could raise rates faster than what we previously anticipated, or higher than what we previously anticipated, kind of continuing to be very hawkish on their fight towards inflation, bringing inflation back down to target. So volatility definitely getting a huge spike here, pushing up over 9%, back up to 24, 25 levels. Crude oil still trading in range. $76 is going to be that level to watch right now. 73, 74, so low 70s is a very strong area of support for crude oil. And of course, we got a resistance sitting roughly at $81 per barrel. So lots of consolidation in that range for crude oil at the moment. Talking about cryptos, so Ethereum getting a little bit of a bounce back higher from that 200 simple moving average. So we are seeing some momentum back up for Ethereum at those levels, and that resistance is going to be 1658, and Bitcoin's got a support roughly at around that 200 estimate as well. So both of them kind of bouncing off of that 200 simple moving average at the moment, and we are seeing some momentum back up at 20,600. Next resistance really is going to be up to 22.4 for Bitcoin moving forward. Now, coming over to the markets, S&P 500 first, we're starting to see a bigger drop here, and they're trading below the 200 SMA, trading below its previous peak. The next support, unfortunately, is going to be down to 37.75, so this right here is going to be that level to watch for S&P 500, kind of in line with this previous support from back in December. And of course, if we do break down below this support again, unfortunately, we're going to be looking at October lows once again for the market. So next support to watch, 37.75. Starting to break down below the moving averages and its previous lower highs. So it's not looking super great. Talking about the NASDAQ here, NASDAQ also starting to break down below this 200 SMA. So continuing on that downtrend. And this right here is going to be that lower high to pay attention to. We've been getting projected at that level since January of 21 or 22, I should say. And then starting to come down to retest that level. So if we continue to break down, well, the next level for the NASDAQ is going to be sitting right here at just low 10,000s, kind of in line with that support from back in October and December as well. So those right there, kind of like a double bottom for the NASDAQ. That's going to be the support. Talking about Apple here rolling over. Apple, I've got a fair value target around 120s. I think I would be a lot more comfortable kind of picking up more shares at around 120 for Apple, considering the growth rate expected for the future for Apple. And support level is going to stay put at these higher lows. So this right here is also going to be an ascending support level to watch, sitting roughly at around 134, 135 for Apple. Talking about Amazon here also sliding over, down over 1.6%. So still trading in the context of this downtrend, so lower highs and lower low for Amazon. And the next support really is going to be around here. That's going to be inside that green rectangle for us to watch, sitting roughly at around $80 per share. So low 80s is going to be that level to watch for Amazon. Tesla on the day holding up a lot better. So we talked about a support at around 165. It got down to as low as 168 on the day. So some buyers stepping in, but we got a red candle on a green day. Momentum is still very much in the favor of the bears right now. And this is going to be that support intraday or in the short term right now. And the resistance is going to stay put roughly around 175. We're not able to break out of that level yet right now. And of course, we're seeing a little bit of momentum to the downside. So still got a gap to fill over here for Tesla. So we'll see if it actually does come down to those levels. But I'm going to be switching gears now. I will be looking at cash to good puts on Tesla at the moment moving forward. And of course, we'll kind of see where Tesla trades. And depending on that, we'll be looking to either dollar cost average or sell cash to good puts or sell covered calls even further once again. Talking a little bit about PayPal. PayPal had a brutal day, down a little bit over 3.2%. So once again, selling off with the banks, with the fintechs, very similar to what Square had. Square was down over 3.7% as well. So very similar trend on both of these fintech companies. PayPal does have a gap to fill here. So that's going to be the level to watch, in roughly between $70 to $72. And we've got a very strong support all the way down to as low as $67 per share for PayPal. Talking about Square, and Square also very similar, coming down to its 200 simple moving average. So that is going to be that level to watch. It's sitting roughly under $70 for the company, and resistance is going to stay put at roughly $83, $84 per share for this stock. And of course, all the way down to as low as $58, $59. I would be a lot more interested in taking a swing trade, on Square at those levels if it does come down to $58, $59 per share for this company. Talking a little bit about NVIDIA here finally starting to roll over a little bit, down about 2%. And this is the resistance that we talked about, sitting roughly at 240s. We're down to 229. The negative divergence continues to play through. And NVIDIA trading at such high valuations, and the multiples are just extremely overvalued in my personal opinion. I wouldn't be surprised if NVIDIA continues to drop here if this market struggles moving forward going into next week. We've got big inflation numbers coming out. So if this selling pressure continues, I wouldn't be surprised if Nvidia does drop even further, starts to fill this gap a little bit, and we can see 180s, 170s for Nvidia once again. But just be careful because the sentiment and the stubbornness of this stock can keep it very much still elevated and still higher. Talking about advanced micro devices, AMD here pulling back 1.6%. Lots of consolidation for AMD, really. I mean, it's just, trading mostly sideways. It did push up a little bit over the last few days, but then it started trading sideways a little bit. Resistance is going to stay put here at this higher highs, and the higher lows are going to stay put right over here. So we got a very small uptrend within which AMD is trading at. Valuation is a lot better than NVIDIA, but I would be a lot more interested in advanced micro devices in the 70s, probably even down in the 60s and 50s for advanced micro devices given the fair value. But right now, I do have a short call sitting roughly, I believe, around $85 as a call strike. I do have to double check, but I think I'm a lot more comfortable with that price and getting rid of it, and then dollar cost averaging a little bit lower for advanced micro devices. Talking about Meta platforms, and Meta here on the day down about 1.2%, so it's trading right above its 300 symbol moving average, getting a consistent rejection at 188, 189. So this right here is going to be that resistance to watch for Meta, and of course we've got a gap to fill here with a support sitting roughly at around 153 for Meta moving forward. So lots of consolidation sideways right now for Meta platforms. We still have some gaps to fill on the downside and on the upside, and resistance is going to stay put roughly in the 188 level for Meta. Talking about Netflix, so Netflix continues to drop here, down over 1.69%, and the support level is going to stay put at 276. So this right here is going to be that level to watch for Netflix moving forward. We are definitely seeing it really, really oversold with the RSI and MACD coming off quite aggressively. So that is going to be that support level to watch next, where a potential swing trade idea on the long side is going to be feasible, considering the risk reward is definitely going to be very good. There's going to be a good trade setup from a risk reward standpoint for Netflix in the 270s if and when it gets down to that level, considering how oversold it really is at the moment. Talking about Google here, and Google on the day down about 1.7%, so it continues to pull over and come right back down. So it's coming down to its support once again. I actually had a very good conversation with Professor Damodaran, which I will be sharing a video separately on a separate channel, new channel, where we're going to be focusing on interviews and discussions and all that stuff. And he did talk about Microsoft kind of threatening Google's positioning in search, and Google had a 20-year disruption in tech, and now it's time for them to roll over. You can kind of make a better sense of what he had to say, but I was definitely getting a feeling from Professor that Microsoft is got the upper hand when it comes to the AI battle. And we did talk about artificial intelligence as well. But Google here will continue to kind of revise our analysis and of course see where it ends up. But we've got a very strong support sitting roughly in the low 90s, as low as $88, $89 per share for Google moving forward. So we'll continue to monitor that pricing point for Google. Talking about Microsoft now, the other AI component here, 1.4%, selling off down to under 249. So we're still pretty elevated here. I do love this company, quality company. I do want to pick up more shares, but roughly in the 218s to 220s. So maybe even cash secured puts on Microsoft might be feasible in the future, and that's something I may pay attention to for this company. Consistently making lower highs and lower lows, so a very strong downtrend for Microsoft. So lower high is going to stay put, and support levels sitting roughly down to 220 for Microsoft. And Shopify finally coming down to its confluence of support. Not only do we have the horizontal support, but also got the higher low over here for Shopify. So very much kind of at that higher low for the company right now. So if it does come down to low 30s, $30 to $29, I would very much be interested in a potential swing trading idea and a setup on the upside for Shopify. So hope you guys enjoyed this video and a complete update on the markets. And what we're really seeing is a very chaotic environment where Fed funds futures are all over the place. It's a complete mess right now, unfortunately. And given that there's a lot of indecision and uncertainty as well, and the markets are rolling over because markets do not like a lot of uncertainty. So hope you guys enjoyed this video. Have a great weekend. I will be live once again on Monday morning, and next week is inflation, so we'll be live for that as well. Make sure that you drop a like, subscribe, and the link to our Discord and Patreon is going to be down below if you want to access all the trade alerts, all the buy and sell alerts, options alerts. Everything is going to be included along with our private videos. So we'd love to have you on board and be a part of our Discord. Happy investing, and I'll see you all in the next video.